your point of view, I will not say I like the Republicans or I like the Democrats. I'm going to say these policies affect the stocks in this way. And Trump opportunities really refers to opportunities that have emerged in the market because of policy. So in the first year, we invested aggressively in stocks that benefit from the acceleration of creative destruction. And you're all pretty familiar with the acceleration of creative destruction. And what we had said at the end of the year was that domestic policy first, foreign policy second. And so as soon as the second year started, and we got midterms coming up in November, so when the second year starts, we are going on Venezuela, we're going on Iran, and what's next? So what we say is that it's a term that's affecting oil, and what is really driving the market right now is that Trump will, and this is, I'm just straight up, Trump wants inflation down, he wants oil prices down, he wants oil to flow, and by the time it comes around to election time, the oil will be down, the oil will be flowing. So when you see this current turmoil in the market, it's a term for oil. In other words, we're saying that the duration of high oil prices will be much shorter than consensus expectations. So everybody is concerned now that this war in Iran or what's going on in Venezuela or wherever else he's about to go, he is going to free up the flow of oil. And that is the objective, and that will be well done by the time we get to midterm elections. So, turmoil. Buy America. You know, I've been doing this for 30 years and I've never said buy America. But would you, think of it this way, would you buy China right now? I mean, we've got a couple of Chinese experts in the room. Would you buy England now? Would you buy Europe now? Would you buy Africa now? I mean, where would you go? And we've talked a lot about the Magnificent Seven, right? So just to touch on it briefly, Kurosawa did a movie called The Seven Samurai. Does everyone know the Seven Samurai movie by Black and White by Kurosawa? The Magnificent Seven is a cowboy movie with probably Henry Fonda or something like that. But it is referring to these top 7 U.S. stocks, and it's caught on as a phrase. So I would say, is there a Seven Samurai? Are there a 7 Knights of the Round Table? Are there 7 Templars? Are there 7 whatevers? And it doesn't exist anywhere else in the world. So what you have in Asia, in China in particular, and these two stocks getting smacked at the moment, is Baidu and Alibaba and Tencent. In Europe, you got ASML. That's the people who do the lithography. People know what lithography is, right? So when you make a semiconductor, you take sand, which is not conductive, and you put a little pattern on it, very, 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 very little pattern on it, and then you dope it with metal and you stick current through it, right? When you design that pattern, you have to have a lithography, you have to map out this little design on the chip. So the best people in the world at lithography are ASML, that's a European company. So if you talk about the Magnificent, and who are the 7 samurai now? Toyota? You know, Mitsubishi Bank? I mean, it's just nobody of any significance. Japan doesn't have global leadership. So where's the world going? AI is eating AI, and we're not getting in the way. So we're just continuing to be invested in companies that will benefit from a velocity of creative destruction, change, and what that means, and you've all heard me say this before, if you have a bunch of miners' cottages, and you got some miners down there in South Melbourne, and they're working at the Ford factory, they're losing their jobs and they're losing their houses. And that's sad. But what's coming up is an energy efficient high-rise and an EV factory. So the world is going to change, and there'll be collateral damage and people will suffer, but everyone will be better off as a whole. So the whole Republican approach is to allow for change. And so we're not getting in the way of change, and we're embracing it as investors. Okay, so that's basically where we go. This is something that I want to really emphasize because people just overlook it. I got a phone call from FINRA the U.S. regulator last week, and they said, okay, Joe, we've reviewed every email that's come and gone out of both Fortrend Inc. and Fortrend Australia, and we're done with our audit. But they review all your account paperwork, all the emails, all the trade tickets, all the commissions. They review everything. And I hear from FINRA once a year. I mean, once every 2 years, they do a very thorough audit. And I was having this conversation last night. ASIC regulates in hindsight. They punish people who do bad things. And what FINRA does is preventative action. So they're very, very different regulators. And I would say that we run, I take a phone call from FINRA and I talk to them, okay? You don't talk to a cop, right? You do not talk to cops, okay? But if FINRA calls, I talk to them because I know they're just going to make us a better place. So we are dual regulated, and I want you to really understand that that makes a difference, that we're dual regulated. The market is getting smashed here on the Magnificent Seven. You got NVIDIA down, Apple's fairly flat, Alphabet down 11%. Of course, we're up 500% on that. But Amazon down, Meta down, and only a couple of stocks up here, Johnson & Johnson and ExxonMobil. But what I want to point out, and these are earnings estimates through the economic food chain. So mining and materials, industrial cyclicals, consumer non-cyclicals, technology, and financials. But look at those estimates, all going up significantly. And the reason they're going up is because we're rolling forward to the next year. So we've just finished the December quarter. We've got the fourth quarter 2025 numbers in, and then the analysts roll forward to 2027. So the big increases in earnings estimates are dragging the PEs down to 18.5 times earnings, which is a very reasonable number. 18.5 is good, but those estimates are up a lot. In the market, we're seeing oil going up. We talked about turmoil, and we're seeing semiconductors going down. And semiconductors are tough. I mean, they're really tough because they're so cyclical. Tata, I'd like to sort of listen in on this if she can. She's coming because I think she needs to hear this. So semiconductors are down. Just a little focus here. We've got earnings estimates for next year for NVIDIA up 40%. So in my career, I have seen PEs for the S&P 500 expand from 10 times earnings back when we had hyperinflation in the late 70s to about 20 times. So we've had a doubling in the market just based on multiple expansion as PEs go up. In my career, we've also seen the population in the planet double, and in Melbourne double, since I've been here, which is less time than I've been alive. So the things that are driving the market now are this huge growth in earnings. And what's driving the huge growth in earnings? Alphabet rolling forward, and NVIDIA, and in Broadcom, and in Eli Lilly. So what we're seeing here is this extraordinary increase in earnings estimates. And the market is now looking for a 15% growth in the S&P 500 earnings next year. So if you look at this from a big perspective, if you get 3% inflation and 3% growth, then that gives you 6% earnings growth for a GDP adjusted thing. Then you leverage that up, maybe you get 10. So to get 10% earnings growth would be pretty good. To get 15 is extraordinary, and it's unsustainable. But next year we're looking at 15% earnings growth because of NVIDIA, Alphabet, Amazon, and the big IT rollout. So the IT rollout is really driving this market. And that's not happening in Japan, and it's not happening in Europe. So the market this month down on turmoil. The S&P is now at 18.5 times forecast earnings. And that's a reasonable number. Software as a service. I want to talk about this one for a moment. We've probably all seen that software as a service is getting smacked. Okay. So what I want to say is Adobe and Salesforce and ServiceNow are not the same as Intuit. You sign up with a CRM in a big company, and you cannot get out. You are a captive client. Intuit, you're much more of a captive client, because with Intuit, when you use their accounting package, small to medium-sized businesses rely on data input and tax returns. And it is a non-stoppable income stream. The reason that Intuit is getting caught up in the software as a service sell-off is saying AI can write software and replace these guys. It's not going to replace Intuit, but it could replace Intuit other products like Instant Karma, Credit Karma, or Chipmunk, or some of their other add-on services. But software as a service is getting smacked because AI can potentially disrupt it all. And we've seen Block, which bought Afterpay. Anyone know who Afterpay is? What a disgusting business that is. I'm sorry. I have some ethics. Afterpay. Block. They're firing 4,000 workers because they think that AI can do the software development instead. So that kind of stuff is really hurting software as a service. For Intuit to have been sold down with that group by Merrill Lynch and UBS particularly, and have those stocks smacked, I think Intuit is oversold. But I think Adobe's vulnerable. I mean, you can go to another PDF right? So Adobe's oversold. We sold Cisco and bought Dell. So what we're doing there is investing in data center build-outs. We did really well out of Cisco. We sold it, we bought Dell. Dell reported great earnings. We'll go into it in more detail, but we're up 28% on the month on Dell. And what's the expression? Break my arm, pat myself on the back. Jack, can you tell me I'm a great guy?
Standing.
Okay. So Carnival down. So as oil goes up, it's more expensive to send those 90 boats around. And Mike, who's here usually, is going on a cruise this week from Auckland up through Fiji and a bunch of islands. Okay, he's not afraid of going on that trip, but he's not going to the Mediterranean, right? So the capacity utilization rate is down. It is a high fixed cost business. It's like an airplane. You put up a plane, it's going. You put another person on it, it's money, but your costs don't change. So it's a very high fixed cost business. The difference in cruises, of course, is the upsell on board. And the upsell on board to the other restaurant or the day trips, that's a pretty big number. But you need capacity utilization. You need to fill those berths, right? So Carnival down. The big ones, Lyondell, and then, so this is kind of a smattering here, but Moderna had a settlement of a big lawsuit. So they're up. On the downside, Cleveland Cliffs, Whirlpool. I mean, the Whirlpool one really shocked me. You know, they make white goods, right? Like washing machines and things. And people evidently bought a lot of stuff during COVID and did renovations, and now they're not doing that anymore. So you'd expect LG and some others to be down. Stellantis is just a crappy company. They make cars, right? That's the old Chrysler business that merged with Fiat, right? The other ones that are really bad here, they're getting totally smacked, are Coty, Estee Lauder, and Louis Vuitton. So anything in luxury goods going into China is really getting smacked. So, but we're not in any of that. But Estee Lauder, Coty, and the other ones here, Alibaba and Tencent, Alibaba and Baidu are also there. So it's a real mixture of things that are going on in market movers. Yes, Christine?
And Diana, what is the future for the
Wow, that's a good question. What is the future for Moderna based on
in that kind of future?
that? I don't know. I think that's a good question.
Enhanced drug development.
Yeah, I think that's a good question. Yeah, I hadn't really turned my mind to that. I guess AI is going to be able to create a lot of new drugs, and the way they synthesize and do things now so fast, you'd say that Moderna has patents on their delivery system, right? Because instead of putting the antiviral into you, they develops inside you. So I think it's a good question. I don't know. I'll go ask ChatGPT. I'll ask ChatGPT. I don't know. Sean, do you have a view on that?
So I think it'll be an enabler for them.
If they use it.
If they use it. But I think now they've got this class action behind them. And what was important about the lawsuit for patents was that there was no annuity stream they had to pay. It was just a one-off $950 million. I think they had to pay the payments, and they cut clear.
But
So-
the real question is the vaccine, right? So they sold a bunch of it during COVID. They're not selling it now. And what other uses are there for their delivery system? And are they going to cure cancer? Are they going to? So, and they have a patent on the delivery system. But I think the question is, will they will get competition from other people who will invent a new delivery system using AI. I think that's the question, right? Will their delivery system, which is patented, be eclipsed by something invented by AI in the next couple of years? And I think that's a really good question.
Well, they're actually going to use it.
Well, somebody's going to use AI, and
Yeah.
somebody's going to get a new patent. And whether they do it or somebody else, and AI is, I mean, I use it a lot, and it is just overwhelming, this stuff. So I don't know. I think it's a good question, and I think whoever is developing drugs is way out there on some edge that I can't see, and I should think about. The big this is one I really want to point out here is Mike Wilson at Morgan Stanley, and Jack, you know Mike Wilson at Morgan Stanley, okay? So what you don't know is that he is a perfect contrarian indicator. He always gets it exactly wrong. Always. He's just impeccable. So when he says, I'm bullish, I get scared. And he is for the last 15 years got it exactly wrong every single time. So I get worried when I see that there. Deutsche Bank up at the top, you know, reasonable guy. Wells Fargo doesn't really move the market. Fund strat. Thomas Lee has gone weird on us. Thomas Lee was the first Bitcoin crypto enthusiast. He left J.P. Morgan and started his own business. Perpetual bull. But he's calling for a shift back into industrials now. Bank America, it reads as though Cantor Fitzgerald and Bank of America and Oppenheimer, and Stoltzfus is respectable. But what's really interesting is that they're even the lowest projections is not looking for a down market, and Cantor Fitzgerald is even looking for 7,400. So the most bearish analysts on the street are actually bullish, and so we've got this big strong tilt towards bullishness, and it concerns me, but we're at 18.5 times forecasted earnings, and that's reasonable. So it's all about Magnificent Seven and NVIDIA and Alphabet, and you just cannot get in the way of AI, and that's what everyone's saying, and I'm not getting in the way of it. So the bulls, including Deutsche Bank, are saying 15% earnings growth. But the market's going sideways because of this turmoil. So while it's going sideways, you want to get into it. Okay, basically is what he's saying. Allocation is driving a rotation into software and tech. So you've got to be in software and technology. He says the strong supply management data is good, easing inflation. And you've heard me say this before, but Biden got in and spent $1 trillion on lower income people, and that is what caused all the inflation. Okay, it was not, and Trump had already, after COVID, stimulated the economy. We were doing fine. Then Biden comes in and spends $1 trillion, and you get this big increase in inflation. That's all gone now. And what Trump's going to do is get oil flowing, get oil prices down, get inflation down. And if he can get inflation, we're not going to have stagflation. But you get oil prices down, that gives him much more power on policy. And I've said this many times, and I'm just going to repeat it again. Stop listening to Trump. You can't listen to this guy. because what he says is not what he does. And if he sits up there and says, "We're taking over Greenland," just ignore it and focus on what he's doing, not on what he's saying, because he's a headliner, it's not in policy, right? So just be careful. Don't listen to him. Look at what he's doing. Weakness in Asian equities, upside in earnings, macro strengths, recommending the big ones: Microsoft, Nvidia, Amazon, Meta, and JP. Okay, so he's staying long, big, and that's what's driving the market. Okay, Morgan Stanley, Mike Wilson. I hope he's wrong this time. I mean, I hope he's right this time. But he's looking for 17% growth, AI investment. That's data centers, productivity, a fiscal stimulus. So the one big beautiful bill from Trump, that's going to cause stimulation in the economy, and defense industries are doing well. So he likes defense. I actually kind of agree with him this time, but he's a perfect contrarian indicator. And tech, AI, infrastructure, defense. So I would normally say do the opposite of what he recommends, but I'm actually with him this time. Tom Lee, he's gone weird on us. Thomas Lee is capable of coming up with a bullish argument in the most bearish scenario, just a perpetual bull, but he's calling for these granny trades now. Basically saying you got to go back to Dow Chemical and DuPont and Kimberly-Clark, and you got to go back to Procter and Gamble, and you got to go back to really basic cyclicals. He is still very exposed to emerging crypto, right? So, crypto is getting eclipsed by the AI discussion, but it's still very important. And crypto monetizes information in a micro way. So you can, I think crypto is very important, and it's going to continue to be very important, and so we can't lose sight of that. Amgen, Chevron, Union Pacific. Now Union Pacific, I understand, railroad, okay, and you got the big merger now, so there's fewer railroads. You got they're competing against trucks and planes and other ways of transporting. So Union Pacific, Amgen would be, Christine, your argument. You know, are they going to come up with new AI solutions for whatever? So Thomas Lee, Fundstrat, is kind of confusing me at the moment. On the bearish end of the market, Savita Subramanian, she is on the bearish end, but she still talks bullish. And so I look at what the major strategists are saying so that I can kind of piece myself in where I think we belong. She's cautious near term despite earnings. The biggest risk is excessive optimism and liquidity after years of stimulus. Equity sentiment is overly bullish. So she's saying there's just too many bulls in the room. And I can understand her argument there. So she's saying equities could be vulnerable, but she's still saying the market's going up. So we could be vulnerable to an overbought position. That is thematic, not event-driven stuff, right? And what she should be saying is 4 things move markets. When your earnings go up, your prices go up. When interest rates come down, your P's go up. And when margins go up, you make more money. So you've got to look at your PE, your earnings, and your interest rates and your liquidity. So more liquid stocks are worth more. So I just don't think she's grabbing onto real basic fundamentals which drive the market, and it's more of a sentiment, which is surprising for her because she is such a data-focused, almost quant. And so for her to be giving grandiose statements about overbought is unlike her. So it's just unusual. I'm going to skip through socials and I'm going to talk about why we're saying buy American. So creative destruction hurts people. There is collateral damage. You have a war, people die. And you change a parking meter from half an hour to 15 minutes and people get angry, right? Because they get a ticket. So creative destruction does hurt people. but it benefits overall. Republicans have control of the White House.
It's a W, eh?
This is a W there. The White House, Congress, Supreme Court, policy. See, what Trump wants is to get oiled down so that he has more power with policy. And if he gets oiled down, he has more power with policy. And the reason he's beaten up on the Federal Reserve Bank is so they cut interest rates so he can implement more policy. It's about him getting policy control. One big beautiful bill really helps. It's really helping with our economic things.
Wouldn't it drive up inflation?
What? No, it's
Don't
not.
have anything on tariffs, change that.
Yeah, this comes up a lot. No is the answer. And the Liberation Day, or whatever, caused the market to go into some pretty severe gyrations. Tariffs are a sideshow, and they're not really affecting stock prices. What really is going on in the big picture is that the U.S. exports $100 billion a month for oil and widgets from China. So when the U.S. runs a trade deficit and ships $70 billion to China and to Saudi Arabia, that money comes back into the U.S. in the form of investments. So whether it's coming from the OPEC country or it's coming from China, China might funnel it through Australia or something, but that money is a wall of money that causes asset inflation. Now, if we go back to the global financial crisis, all that money was going into Goldman Sachs, and Goldman Sachs said, okay, we'll securitize mortgages. Now all this money's flowing into housing, and you get a bubble in housing. What's going on now it's much harder to see how this bubble is going to burst, but where the bubble is in ETFs. So the OPEC countries and China cannot buy a company where they get voting rights. So they buy ETFs. So Vanguard, State Street, and BlackRock get flows of money into ETFs where who has the votes? Larry Fink has the votes. So if Larry Fink has all those votes and he's not voting, then is he, and I'm making a couple of leaps here, but is he where Fidelity was in the 80s? Now, what Fidelity used to say in the 80s, the big fund manager, is we don't vote. And then the Greenmillers came along and they said, oh, takeover mania, we vote. So Fidelity changed their position on this. If Larry Fink votes, he's the most powerful man in the world by far. So that is where it's really flowing. That's not tariffs. Tariffs are just a sideshow. Okay, tariffs are for goods, not services. Things flow across borders, but the real money flow is exporting U.S. dollars and that coming back into the U.S. causing asset inflation. Right? That's where the big flow is. It's not in tariffs. Tariffs are just not that consequential. It's headline driving, and it drove the headlines, but it's not factoring into our analysis at all. Right? 15% earnings growth, 18 times earnings, productivity gains by sector expansion, tightening labor markets, immigration. I love the way Australia does immigration. I really do. I think that the way we bring in students, and Tata is a good example here. We bring in these smart people from overseas, they get degrees and they stay. And I think we're attracting smart young people from overseas. The problem with Germany is that you get these migrants from countries where they're economic refugees. We're not taking economic refugees, we're taking people like Tata, okay? Smart people who come and you're getting educated. So immigration in Australia works. America is saying, can all of you drug dealing sons of bitches get the hell out of here? We're going to go blow up a cartel. So, Trump's going after the cartels in Mexico, right? So, labor market, let me just take a step back here. Why did the border become so porous? Why did everybody come rushing across the border during Biden? Because those immigrants vote Democrat. So the problem that Trump sees is let's get all these people who are bringing fentanyl across the border out of here. So that's vote-driven stuff. I'm going to let Sean talk about some stocks. Don't listen to Trump. Don't listen to him. Not going to become the Gulf of America, is it? Right? Okay, so
Joe, what's your view on midterms?
what?
What's your view on midterms?
I think Trump will lose one of the houses, the Congress or the Senate, and he'll lose power. So, and he's planning on that, and he is going to go very hard as long as he can, and so expect a lot more in the next 9 months. Expect a lot more from him, and I think then he'll lose the power. And the pendulum will swing back towards, people who want to tax the rich and support the poor, and everything's going to change. But we're riding it now. Yes, Carnival went down and Intuit went down, but we bought that. So, Sean, do you want to talk about some stocks?
Sure.
I don't know if I can remember because I didn't.
Okay.
Is it?
Up past.
We have 15 minutes.
Yeah. Okay, so it's about 1.5 minutes per stock. Right. So Solventum, listen, we've been on that stock now for, must be coming up 18 months. It's spun off out of 3M. We bought it at around about its current level. It rallied up quite well. Nelson Peltz from Trion Asset Management took quite a significant stake, wrote a white paper suggesting $130 was about the fair value for the company. They've done everything right. They've had consecutive earnings beats, but the stock's basically where we bought it, about $7. So it's ratcheted up, come back down. Positive news, just really in a sector that isn't getting a lot of attention at the moment in the market. So Solventum, for those of you that don't know it, is a medical devices company. It produces dental hygiene products, and it also produces IT for doctors' clinics. So it's a company of companies that spun off out of 3M. We think it's a fantastic buying at these levels.
Now, hold on. Is this data? Their big business is data, patient data.
Yeah, exactly.
Okay, now patient data was going to benefit dramatically from blockchain because you can record the data, and that was the big opportunity. Now it's the threat of software as a service being eaten by AI. So the risk in Solventum is their data business and AI exposure. So it's been going up.
So it's back to where we're at. They did sell a significant filtration business, paid down a debt. So as you imagine, when companies do a spin-off, they tend to load them up with a fairly decent amount of debt, which 3M did with this company. They've got themselves into much better covenant positions. We just think it's just going to stop wise patience.
Pun intended.
Yeah, but not spelled that way. Okay, Walt Disney, after extensive search for a CEO internally and externally, so if you recall, Bob Iger was there, he left, came back, tried to fix the company. They've appointed Josh Diamaro as the CEO, 28-year veteran within the business, so understands the culture of Disney, and more importantly, his most recent posting was running the Parks and Experiences division, which has been one of the jewels, seems to be one of the jewels in the Disney stable. So pretty happy with that. And that follows on from the appointment last year of Melbourne-born James Gorman as the chair for Disney. So, Disney, as you probably will recall, got into some trouble when they went woke, so go woke, go broke, and some of their staff became quite strong activists in Florida, which caused Disney to have a major fight with Ron DeSantis. They got stripped of some of their special protective powers that they had, which obviously caused a lot of concern for shareholders. Nelson Peltz went onto the board and took a stake and tried to get some radical change in that business. He left, and the stock's just sort of gone up, down, and really tracked sideways for quite some time. We like Disney because it has got great content, and obviously they've got a major streaming service, so we know about Disney Plus. The headwind for the company, a couple of factors: international visitors are down, and obviously with what's happening with Iran, that's probably not going to be a tailwind for them either. And also some of their costs are up on their streaming. So NFL is probably one of the bigger businesses that they stream ESPN, and their costs to the code to acquire those contracts are up. So, but nonetheless, we are optimistic the company's on good footing, good management, and we see sustainable revenues.
About the shipping.
Shipping is a very small part of their experiences business, so without a doubt, the same impacts for Carnival will be hitting Disney. I'm not sure. I know they do a lot of sailings out of Florida and places like that. I'm not sure what they do in Ned. It's pretty small part of the business.
Yeah, I'm going to put my neck out here and make a personal political statement. Okay? During Biden administration, there was a lot of support for the LGBT plus community, and a lot of companies had their what they call participation philosophies. So I don't know how Harley Davidson is going to have, as Clint Eastwood called, dykes on bikes, right? So I don't see how a bunch of these companies got just dragged into all that stuff. And I'm going to say that at lacrosse, where I play, okay, we had the Pride Cup. And I thought it was such a bunch of garbage that we had a rainbow on the field, and that we had a Pride Cup when lacrosse is families. There are about 5 big families at Malvern and at any big club, and we should be having a family cup, not a Pride Cup. And so that's my view on that.
Anyhow,
Thank God we got rid of some of that loaf stuff.
so Joe would have let me take a float in Mardi Gras this year. I'm not quite sure. I was pretty keen on it.
I am so sick.
Joe, they still.
My pronoun is it.
Okay, so as we said earlier, Dell is now in the relative value model. We sold out of Cisco to buy Dell, and that was a great trade. When you look at the way Dell and Cisco tend to trade, they look like sine waves as they're sort of over and under each other, and effectively the relative value just said Dell was just way better value to buy. So we sold out of Cisco, banked a reasonable profit. Dell's trading at a 4 PE of 20 times, so that's good value relative to a market of 18.5 times. And more importantly, we bought it and then it had a very strong quarterly profit update. So we saw the stock rally significantly for us, which was quite pleasing. At the same time, Cisco supported, so that was a really good trade. For us, sales were up 39% on the quarter, and that's really driven by AI data centers. So Dell are more than just a laptop company. Their major growth drivers really are around big service hardware for machines. Qualcomm had a pretty soft month, just sort of ebbing along. It's been a bit disappointing to say out of the stocks in the portfolio. It hasn't had any bad news. It's had 5 consecutive quarters, I think, of beats versus what the market thought it was going to do. They've had great pipeline. Obviously, Snapdragon's one of their more well-known products. They also produce CDMA technology, so anyone with a Samsung telephone, that's Qualcomm powers that device. And also IoT, which is Internet of Things. So that's anything, cameras that you have in your home to tracking devices on your car, etc. We just think it's a patient story. Buy that stock. It's not very expensive. We think it's good value. Boeing, listen, it softened obviously because of the Iranian issue. Half their business is defence, but they had a bit of an unexpected breakdown in the previous quarter, which caused the defence business to look a little bit questionable. We think it's great value. It's around about $220 or thereabouts at the moment to buy a Boeing. Albeit the reasonably new CEO came out of Honeywell. So Honeywell are a major avionics manufacturer, so he's an engineer by trade, which is the first time probably in 10, 15 years an engineer's been at the helm of that company. We're seeing some pretty good sales, so strong sort of sales growth, and Boeing's really about a free cash flow story, and they've now had 2 consecutive quarters of positive free cash flow, and that just gives them the money to be able to continue to invest into their business.
As long as they don't crash planes and don't have doors fall off.
Yeah, well, Boeing generally don't crash them, the pilots do, but yeah, the doors coming off, things like that, that was a real disappointment for us, because we were buying that stock for what people sort of $160, $170 type area, and it rocketed up to $250, and things were looking pretty good. And then obviously those bolts weren't fastened in that MAX aircraft, the door blew out, and so too did the stock price for a period of time. But we've continued to buy that company.
All this regulatory oversight and this intense scrutiny will eventually pay off, and they will get through this, and then we'll go back.
Yeah, so they've been under intense oversight from the FAA. Think about as though you've had a heart attack and you've now got every doctor in the world measuring you and watching what you're up to. More importantly, that oversight is now permitted
Or
them.
if you've had a rogue trader come in here and do a bunch of trades, you're going to get FINRA just beating the hell out of me for years, right? So they've got, and that you got to fix that culture.
So how long was that?
When did those planes go down? 3, 4 years ago?
So Kelly came on board about a year ago. So he's
when were the crashes? 4 years ago?
longer than that. So you're talking about the MAX. You had out of Indonesia, Lion Air, I think was the first one, and then you had one in Sri Lanka. So it'd be 5 years. I think.
I'd say
Yeah,
yeah.
5
5 years ago.
Yeah.
Yeah,
It's been some time.
it's been some time. Yeah.
We got in after.
The 4th production line's about to open, and that's really important because it's a little bit of a race between them and Airbus around getting product out into the marketplace. So that's looking positive. So it says to me that the FAA are pretty happy with what they're doing.
How about the military side of Boeing? Like, is it doing the fighter? It doesn't do no.
Yeah, it does. No, it does fighter jets as well. So the FA-18 Hornet is a Boeing product.
I thought it was Lockheed.
McDonnell Douglas was bought by Boeing.
Oh.
They also produce a lot of space equipment. They produce the 767 tanker, which is what they've been having these write-downs on. So, and they're looking to maybe reintroduce the C-17, the big 4-engine airlifter. That was a McDonnell Douglas product. Yeah, interesting times for Boeing. So they're targeting $10 billion of free cash flow this year. So, 2 consecutive quarters, they're well on track. I like that stock. I think once this Iranian issue gets sorted, I'd expect that stock like Boeing to do pretty well in that recovery story. Intuit, as Joe sort of touched on, volatile month. It actually gave a positive return over the month, but it was a bit of a ride, and some in that company. As Joe said, they got caught up on the SaaS hype. We think it's different to Adobe and others because of those obviously linkages to organisations like the IRS and banks, etc. MailChimp's one of their underperforming divisions. That's a direct mailing business that utilises information from the net. So I can see why that could be under pressure from AI. It's just basically taking it out of
Credit
place.
Karma. Yeah.
Yeah.
Credit Karma could be AI now.
Yeah, I hope Credit Karma's fine. I've personally invested in a startup that does AI around loans origination, etc. So I'm sort of watching that space pretty carefully.
You should talk to Nick.
Okay. We think at these levels, gosh, the market's pretty bullish on the stock, and even as it's sort of sold down, the top end analysts still pretty bullish on where they see it going. So at these levels, I think it's good buying.
How does Intuit compare to Zero?
They're the same, basically. I mean, one is the U.S. and Zero and M1 will be Australia. So Intuit dominates the U.S. and we've got they're the
So
U.S.
that one could take over.
Yeah.
Well, being Kiwi, I think it's way better than the American system, but you know,
Well,
be a bit biased.
It's same business model.
Yeah, same sort of thing. Alphabet, G, you know, we've been on a real ride with that stock. It's up 80% in a year. As Joe said, we're probably up about 500% of the time we've held it.
At least.
It was
We bought that at 18 times earnings 10 years ago.
it was the cheapest of the Mag 7 stocks. Now it's in the mid pack, so it's sort of moved up, and as you can see, it's got a PE a little bit above where the market's at, which is what you'd expect for a company like
Do
Alphabet.
not get in the way of Alphabet. Do not.
The big move we saw was once the federal judge said, hey, you don't have to sell off Chrome. There was, you know, obviously Lena Khan, who Joe's spoken about quite a bit over the year, over the previous years, who were concerned that she was going to sort of force the breakup of that company. Obviously, Trump, new regime, new people, nothing to see here, move on.
I respect it. I really respect her.
Yep.
Does everyone know who Lena Khan is? Okay, she's Pakistani immigrant student who went to Yale and wrote a thesis on the possible breakup of Amazon for vertical integration. So because she wrote her thesis on the irony of vertical integration being a monopoly, she ended up becoming the head of the Department of Monopolies and Mergers in the US.
FTC. Yep.
Yeah.
You
But brilliant woman. I mean, she was a Democrat appointee, and now we got a Republican in that position, right? So
Yep.
she's out, but a lot of respect for her.
We've got 30 seconds to go, Joe. You're killing me for time. Obviously, everyone knows these businesses. You know, it's just such a diversified global earner. You buy it at these levels, no problem. Citigroup, it was really one of our bigger turnaround stories. New CEOs now 3 years in. She's really stripped back a lot of the costs, and she's moved that business from being a bit of a dog to actually a really good performer. Another earnings beat, still the cheapest US bank compared to its competitors at 9 times forward earnings. It's pretty cheap. And more importantly, you know, we bought it because it was trading at about a half times price to book, and now it's up to close to 1. And 1's kind of like the benchmark that you'd expect a financial institution to sort of be at, and then you have a premium on top of that, depending on what part of this market structure you're doing well. So we still see more upside to that. Softened a little bit recently, probably on the back of concerns around some of the private credit markets, but all of the US banks have a little bit of softening. Lastly, I thought I'd throw this one in because we haven't spoken about it for a while, and that's Moderna, which was sort of covered on. It was up 19% last month, up 31% the month before that, and up 128% in a year. It's been a long time that we've been able to say that about Moderna, because it's normally the other way around. Listen, I think the headwind for Moderna really is going to be around Kennedy, obviously running health, a bit of a skeptic around some of these things. Once that sort of moves through, and let's see what happens to the midterms. The healthcare sector could really fire if Democrats come back in. It's sort of, as we're seeing with Solventa and other stocks, it's been a bit of a neutral play for a while because there's political risk.
Yeah, I just emphasize that, Sean. The U.S. insurance companies are and the CVS, they're all snapped. They're in bad shape, and so we are really out of healthcare in general. But Moderna's the legacy.
And lastly, to finish off, we've got 3 supplementals. Palantir's slightly south, but been rallying quite strongly. They've been very busy in Iran. They're an AI defense business. Arc Technologies, it's traded beautifully in the last month. Happy with that. That's just a fund that invests into creative destruction. And Coinbase actually has been volatile, but it's up in the last month. And we think it's a good entry point.
So the performance, I just want to point out the performance here. You see, we underperform in a down market, and we outperform in an up market, and underperform in a down market because it's a 10 stock high conviction portfolio. So we will be more volatile than the market. And you'll see recently here, we're up a lot more than the market, but we're overweight creative destruction and growth. So we're in the right place at the moment, but in a down market, we sometimes underperform. So that's the strategy here is to have a 10 stock high conviction portfolio that complements what you already have in Australia. So this is not all your money. This is us taking your international growth slides. Thank you for coming.
Great.
Well, man, what do you think?
Very good.
Yeah.